On guys, welcome back to another video. So in this video I'm actually just going to break down the trade that we took. This was on the 12th of October 2023. So we ended up getting some buys from this zone here, but I just want to break down exactly why we took some buys there and what exactly happened, right? So if you can see, I have these arrows here which just shows me, so I've put this here to indicate that these are potential reversal zones. So yes, this is actually a sell zone. So if we sold from here, if we had a break and retest here, we were actually going to sell to this zone and then catch the buys. And it's not guaranteed that it's going to reject and reverse from the zone, but it's just something that there's a high possibility that it can. Like, I mean, we even have it here, but it just shot through. So this was obviously not going to happen. So I can actually just delete this. Right. So how I know that, well, not how I know, how do I have an indication that this is actually a reversal zone? So let me show you, right? So if I go to the 1 hour chart, and if I just, so you guys can see this bullish move that happened, right? If I look, this bullish move, this leg here, actually started from this candle. Because this here, I won't count this as the start of it, because obviously we pushed all the way up and we retraced here. The actual bullish part of this entire leg started from here. So what you do is, if you just take your fib tool, right? If you line it up here, so this is the low, and then at that point before yesterday, this was the high, right? So the high was there. So if you see that, so technically we have the 618 level here that is at a zone that's drawn out from this day, and we have the 786 level that is also at a zone that's drawn out from a previous day, right? So these show me that these two zones are actually strong zones. The 786 is never a strong retracement, and if price does retrace at the 786 level, it's not going to have a lot of momentum to continue breaking new highs and all that stuff. If price is retracing at the 382 level, we're going to see some serious pushes up, and we're going to be able to see some new highs being broken, right? So just by doing this, I was able to know that this is a strong zone, and I had this drawn out. If you see my other trade breakdown from, like, I think Tuesday, I had this also, and I think it reversed here yesterday. So I mean, this showed that it was true. It reversed here twice, and then at the end of the session on the 12th of October, it actually broke through and went down, which is fine. So we need to still watch out for this 382 level. I'm actually just going to put a line here. Okay, so that's how I've got the potential reversal zones. Then even these other lines here to show buys all the way. This I've just taken a fib on a higher time frame, just to assist me with that one, right? So I'll get more into that when I'm busy doing those the long-term analysis and stuff like that. Right now I'm just doing the daily analysis. So now let's get into the trade. I'm just going to show you why I took certain zones for this trade. Okay, so I had these zones from previous days. These are, let me just see here. Why did I have this? I can't recall why I had this. I don't know if it was because of this high. But these other zones I had because of previous highs from other US sessions, right? You can see that was here. So the main thing that I do, I've got two zones where price is in the middle of. All we're waiting for is a break to the upside or a break to the downside. That's literally all it is. But it wasn't that simple today because of CPI data that came out. Now, CPI data, obviously, it pushed the price down a lot. So it just broke through the zone. So this was an invalid zone today. But now what we were looking for, because we missed the whole bearish leg of the day, I was looking for a reversal. Even if it wasn't a big reversal, I was looking for a reversal up here. And then it could continue down. That was fine. So let's just get in there. Okay. So now we're on the 5-minute chart. Let's see how things play out. So I've got the Asia lows and the Asia highs marked out as well. I didn't do the US high and the US low because the US high was all the way up here, and only once price got here, then I was going to put it, and it was at another zone, so it wasn't really relevant. And the US low was over here at another zone, which is the Asia low. So I didn't really bother putting the US high and low. So I'll show you all the thinking and where we executed this trade today. So you can see price just pushed down. If there was a retest at the Asia high, I was going to sell from here. But we didn't get the retest, which is why we didn't sell from here. And I said it on the group the other day, I only trade retest setup. So if it breaks and retests, I trade that setup. Only reason why is because there's a much more higher probability of that trade being correct and going in our favor rather than just selling because of a breakout. Because remember, in one candle, price can go here, and in the next candle, price can be all the way up, all like through these zones and back up here. So the main thing I wait for is a retest and rejection. So if we were to get a retest back here and rejection on a candle, I would enter on that rejection candle and catch it all the way down. That's the trade setups that I look for. That's why you'll see that we have a much more higher win rate because we wait for a lot of confirmations before we actually enter a trade. So let's just keep on pushing, see where we get to. Okay, now we at, oh no, sorry, next zone. We probably just smashed through the zone there. Okay, so we're here now. Now, what I'm looking for is a break inside the zone. So you can see we tapped in, and I'm looking for a rejection of the zone. And it must be a bullish candle. So we saw this, right? Now, I think we entered here, but that was also acting prematurely because I should have waited. If we're getting rejections of a zone, it usually does this. So we reject, we break away, we come back, and then we shoot off, right? That's normally what we'll do when price is coming down into a zone and rejecting. So we should have taken this trade on the retest. So I think we get the retest. Right here. So this is actually where we entered again. So we entered this here. I was at break even. Trade went up. It was in good profits. Came down. Took me out of break even. Then we all re-entered here on this candle at the bottom here. So as you can see, the only reason why I entered was because of this setup. It was literally this. It just broke into the zone, broke away, retested it, and we got in. And also on the 1 minute chart, I was able to see this was a massive liquidity grab. So you can see liquidity, it pushed below the low that it just created. And you'll only see liquidity on a 1 minute chart. Right? You won't be able to see liquidity grabs on a 5 minute chart or a 15 minute chart. You'll be able to see it as a wick after the candle is formed. So that's too late. The only time you can see liquidity is on a 1 minute chart. So once I saw that liquidity grab, I didn't even wait for this candle to get closed. I already sent the signal for us to buy here because that was extra confirmation. And liquidity would look something like this. Let me actually drop down to the 1 minute chart so I can show you. Here. So you can see it was a full-bodied bearish candle and immediately it was a bullish candle and breakaway, right? And this candle here broke the previous lows and it immediately rejected. So that showed me that it was a clear indication of a liquidity grab. So you can go and back test this a lot. If you look at all reversal points, in some way or the other, you will always see a massive push in one direction just to flip and go the other direction. You'll always see that. Right, so we entered here and then my first target was so we entered around here. First target was here. Yeah, that was first target. Stop, we had it first around here, but as the trade went up, we moved the stop loss. No, actually, I'm lying. I said the stop. Wait, let me just check. Sorry, just mind me. Stop loss 33663. So the charts are actually different. Yeah. Well, the stop loss was around here, right? So yes, we did put the stop loss at the low because the liquidity grab already happened, so price wasn't coming back down here. So that's why we were able to put it at the low. Normally what we must do is, let's just say if we entered here, you must never put stop loss at the low because price will come back for liquidity just as you saw here. So when you're putting a stop loss and the liquidity grab did not happen as yet, make sure wherever you feel your stop loss should be, like put it another 15 to 20 pips lower than that. I know it's a lot, but it protects you from when this happens. My theory is when I trade, if I put break even and I see it coming back and it closes me out at break even, that's fine because I already closed half my positions here. So what I'm looking for is, should I re-enter this trade or is it going all the way down? So that's my thinking and understanding, but people don't trade like me. People are different. So I put break even once price pushes away from my entry. And if it takes me out again at break even, all I have now is another opportunity to look and say, hey, is this trade still going in my favor or is this going against me now and don't enter? So that's why I do that, right? Okay, so as you saw, then we pushed up, pushed above the zone. Then we had a lot of like playing here. I think it really wasn't going. I think here it just touched the zone. It almost hit TP. It was so close to TP, but it didn't get there. Then price started playing around, and I said on the group, if price closes below this red zone, you can close the trade. But I called for it to get closed, I think on the next candle. It was on this one, which I shouldn't have did, to be honest, because we should have waited for price to close outside of the zone because these zones are actually very strong and they get respected a lot. So, and you can see like after that, it literally just pushed and it went through. It was just a little bit of waiting that we needed. But, I mean, yeah, that was technically the trade that we took. This was it. It was just to catch this move here, and then price ended up reversing and going down here. But our TP1 was here and TP2 was here. And I think it went through TP2 if I'm not mistaken. Just went, yeah. So what we'll do is today, for today's trade, today's Friday, we're going to be looking for a nice setup like this again. But what we're going to do is we're going to try and hold this out a little longer. We're going to try and hold it out a little longer and see, because if we could hold out this trade from yesterday, if we could hold that till TP2, this was a 139 pip move, 139 pip and a 9.65 ratio. It was a good trade yesterday, but unfortunately we got out of the trade. So I'm going to try today to hold it. Remember, I'm going to try to hold it. If you guys want to close it after we send the signal, and if you're happy with profits, please do not hesitate to do so. I know Clint has that saying, once you smile or something like that, you can close your trade. And that is true. It's just that for now, like, I'm trying to catch bigger moves. I'm not doing that whole scalping and buying here and buying here and buying here. I don't want to do that. I just want to catch one entry and hold it. And if it takes me out again, it takes me out. Like, that's the sort of attitude I want to go into today with. So yeah, thank you for watching. This is the breakdown. I'll probably do another breakdown for today's trade, whether it's a win or lose, doesn't matter. We'll do a breakdown and I'll catch you guys in the next one. Cheers.